Now, whether you're looking to preserve your savings, protect against inflation, or just build a lasting legacy, gold bullion offers a reliable and enduring solution.
You have to have part of your portfolio outside the digital realm. If the digital realm is automated, affected with AI, subject to all the processes we've been talking about, how do you dodge that bullet? You know, again, you can use cybernetics or whatever, but that's up to the governments and the regulators. The answer is have some assets that are non-digital: gold, silver, fine art, land, natural resources. There are a list of things where you actually own the thing. And it's, you know, if it was safe storage, and there could be some carry costs and all that, that's all normal. But this is, by the way, this is how Russia has survived U.S. sanctions. Elvira Nabiullina, who's the head of the Central Bank of Russia, in my view, she's the only central banker in the world who actually knows what she's doing. But over 10 years, and I warned the Pentagon about this in 2009, over 10 years, she put 25% of the Russian reserves in gold, physical bullion in safe storage inside Russia. And so when the U.S. froze the Russian assets, the U.S. froze about $300 billion of U.S. Treasury securities lawfully purchased by Russia, held in digital custody in Euroclear in Brussels. Most of them, or 2/3 of them anyway. Those have been frozen, and the U.S. is now in the process of stealing them to finance loans to Ukraine. Again, big topic. We'll leave that for another day. But the reason Russia is not wiped out, the reason the Russian economy is actually outperforming the U.S. economy right now is partly because she put 25% of the assets in solid gold. And by the way, and as you know, you're an expert, the price of gold has doubled. Well, it's up 70% in the past 2 years and doubled in a slightly longer time frame. Russia has made as much money on the gold on a mark-to-market basis as they've suffered losses in the Treasury securities, because they've made over $50 billion of mark-to-market profits on their gold. But the point is, it's digital, so the U.S. can't touch it, can't freeze it, can't interdict it, et cetera. And those assets are good, and it's money good. So I recommend people have gold in their portfolios. I recommend 10%. You know, if seasoned to taste. If you want more, that's fine. But 10% in a meltdown scenario of the kind I warned about in the book, you'll be fine. In fact, the price of gold will probably, the dollar price of gold will probably soar, because people will be flocking to gold. But, you know, for the people who got in early, they'll do fine.
I guess for quite a long time, we have been saying, from bits and pieces that I've been picking up in China, that the day will come when China will announce that its currency is supported by the gold which its citizens own, which is around 25,000 tons.
Whoa.
And the government, through different ministries, own another 25,000 odd tons.
I like to look, Dave, as gold is like, look at planet Earth as like the beehive mentality. Everybody on Earth has the same mentality, and that's they buy gold. When they think, when there's war going on, there's uncertainties, there's bubbles everywhere, people start to move into gold. And that's what we're seeing. I think globally, a lot of people are uneasy. They're concerned about all kinds of stuff unfolding. And so this is a huge red flag that I believe we've hit that measured move. There might be some more upside potential in gold right now. But as you and I talked months ago, this is kind of where we are talking about the market's going to. And then from here, we probably see some multi-month pause and pullback while the stock market eventually resets. And then I think gold is off to the races for what will be a multi-year rally like we saw last time, where it could be 3,000, 5,000, 10,000, whatever gold settles at. So there's not a whole lot of upside, I don't think, right now imminently for gold or silver, because they're doing the same thing. But this is a very strong chart pattern, and it points to much higher pricing down the road. and tells us the sentiment of what most investors are doing. They're moving to physical metal because they're scared about the currencies. Currencies are all over the place. Stocks are overvalued. Real estate's overvalued. Momentum in the U.S. economy is starting to slow. And so people are moving here to get out of those systems and hold physical metal. And as you know, I'm a big fan of physical metal. I've got all kinds just sitting around me. I like to collect all types of different types of metals, but this is what people have been doing right now.
I mean, I want to say this is my fundamental view. The dollar is a doomed currency, doomed. Now, in what way it will go down? I live in Thailand. Will the dollar drop a lot against the Thai baht? I'm not sure. I doubt. But will it drop a lot against, say, precious metals and possibly, you know, things like Bitcoin? I'm not a Bitcoin prophet or, say, person recommending it as an asset. I prefer physical precious metals. Platinum, gold, silver, and some other commodities, you know, other commodities are much more attractive than gold. But for the ordinary citizen, I think what is relatively safe is a gold asset. Now, will BRIC introduce new currencies? Will the dollar be the reserve currency of the world in 100 years? Zero chance. Zero chance.
I think that we will see a monetary revolution. I think that what was once the greatest global monetary system or unit to exist in the world, the US dollar, backed by gold, backed by the strongest country in the world, was politicized and weaponized and perverted until one day it will lose its global reserve currency status. And then one day, like every other paper money in the history of monetary economics, it will die. And I think when we look back at the causes of what caused this fall, you'll only have the American government itself to look at. Countries, even the ones without an adversarial relationship to the United States, are looking around and saying, hey, wait, the United States can put their finger on the scale a little too heavily on this dollar, between sanctions, between their ability to seize assets, between their ability to kick people out of international payment systems. The United States has an outsized amount of power. And so even there was news, if you're familiar, John Nieuwenhuis, who is an excellent gold analyst, recently reported that the Eurozone is considering a gold standard. They're making preparations for that pivot as well monetarily. So I think that we're in the middle of this revolution that you're talking about. And I don't think people are going to wake up tomorrow and suddenly realize, have the scales fall from their eyes and understand that the US dollar has been a political tool that politicians have used to achieve their ends for decades. It is a weaponized instrument. But even if people don't understand that, they can understand the smaller, more bite-sized, easier parts of this to understand, which is, wait, I want a money that holds its value. I want to be able to save my money and know that its value will be there a year from now or 10 years from now. And those are the incremental ways I think that we can see sound money be adopted.
So why don't you check out one of these videos now to help you take that next step on your gold investment journey?